Hello friends, welcome to our channel Easy Investing. In this video, we will learn about why dividend stocks are a good passive income source, and we shall go through some stocks from US market who are leaders in dividend categories. So stay tuned in. Dividend stocks can provide investors with predictable income as well as long-term growth potential. Four important aspects that we need to look at before we decide on our dividend stock strategies. So let's start with our first aspect. Let's take a step back. If not dividend stock, what are my other risk-free options of investments? What comes to my mind first would be a certificate of deposits or checking or a savings account. So let them look into some more details. The best rates for a certificate of deposit in market are in the maximum of between 1 to 2% of APR. And most of them would have a minimum deposit to open and a lockdown period, so which basically brings a lot of constraints to my proposal. The online savings account currently in the market are in the range of 0.5 to 0.65 APR. Similar to the certificate of deposits that we evaluated, most of them will have a minimum balance requirement and a cost to open. So how is dividend stocks better? By building a portfolio of high dividend stocks, you can create regular passive income at an annual rate that's much higher than what we get on bank investments. The typical dividend stocks are in the range of 2% and up. We are going to look at some examples later in this video, like AT&T, P&G, the stocks that our regular go-to stocks. Coming back to our second aspect that we need to look at. High dividend stocks, given that these are stocks, always have a great potential for capital appreciation. In that way, you can earn passive income from two sources, both dividends as well as from the capital gain. Thirdly, dividends are very rarely decreased. So if you have a stable and reliable income stream for as long as the company we have invested in can pay the dividends. So let's evaluate few market leaders in dividend stocks. Let's start with Procter & Gamble. It has a dividend history of more than 48 years. This is how the chart looks like. So we have the stock prices over the last 20 years. We have the dividend payout, which basically means that in dollars, what is the dividend that's been paid out? And in the third graph, we see the dividend yield. What is dividend yield? It's basically how much dollars are you getting for the stock price that you pay for it. Historical dividend payout and yield for Procter & Gamble have been there from 1972. The current payout for Procter & Gamble as of October 27 of 2020 is $3.16. The current dividend yield for Procter & Gamble is around 2.2%. So how did you arrive at that 2.2%? Your stock price is close to $150 and your dividend payout is in the ratio of $3. So 3.16 divided by close to 150 into 100. So you will come across 2.2%. So which is a pretty good, decent, reliable source. The yield is our first aspect. The second aspect that we wanted to look at is the capital appreciation. So if you see the capital appreciation for the stock for the last 20 years, it has been in the mid 20 to less than $25, and it's currently priced at $150. So look at the increase in the stock price. So that's all your capital appreciation that you're getting. So that's again something which is the most important other aspect that we need to look at. The third aspect that we wanted to look at is the reliability. So if you see from the dividend payout perspective, over the last 20 years, that graph is steadily increasing, which means that every year it has been paying out its dividend and it has been increasing and the company is doing good. it provides a good stock for my dividend strategy. Okay, now let's look at AT&T. AT&T have been in this market for the 31-year dividend history. So if you look at its stock price, it has some ups and downs, but the dividend payout, you could see that it has been steadily increasing, and the dividend yield is in the range of 7% as of 2020, which is an amazing yield percentage. So for your stock price that you're paying, like in the less than in the $25 range, you have a dividend payout of $2, which is a pretty good returns. Along with that, you have the capital gains as well, so which is awesome. Okay, let's move on to the third stock that we have. It's Target. So again, for the Target, if you see in the last 20 years, the stock price have increased, the dividend payout have increased. It's actually the curve is much more steeper in for Target than any other stocks that we evaluated now, and the dividend yield has also been in that good range of 2%. So one of the best other performing dividend stock that we look forward for. Johnson & Johnson, it's similar use case here. So the stock price so there is always a capital appreciation, the dividend payout have always been high, and the dividend yield is also greater than 2. I understand that you don't have time and energy to look into a stock. So what's the next best option? If you're looking for a safer dividend paying option, then we have a solution for you. Look out for Dividend Aristocrats Index. So index is always a sum of, it's not just one stock, it's a collection of stock. The Dividend Aristocrat Index, which is maintained by S&P indices, is a great place to start. It's a collection of several companies that have increased the dividends for at least last 25 consecutive years. That means that every company in this index successfully gave investors raises, not just during the good times in the market, but also during more volatile downturns, such as the dot-com crashes of the early 2000s, the financial crisis of 2009, and the COVID-19 pandemic so far. So that may be a safe investment than the average dividend paying stock. Cool. So we have the strategies up in here and have given you some solid examples of your stocks and the index that we can look forward for. If not these, if you want to go ahead and find your own dividend stocks, what to look for in dividend stock? If you're new to dividend investing, it's a smart idea to familiarize yourself with what dividend stocks are and why they can make excellent investment. So here are a few concepts that would help in that regard. One is the payout ratios. Payout ratios or the history of raises. So how have been the dividend or year after year, especially during the recession time and tough economic times, how have the company been giving out their dividends? Do they have a steady revenue and an earnings growth? What is the competitive advantage that the company is having? And how is the dividend yield for the company? So these 4 or 5 parameters is something which is readily available in the financial documentation that's been publicly available for any investor. So if you want to go and do more detailed analysis, these are the particular aspects or the key concepts that you should familiarize yourself with before you invest in that stock for its dividend purposes. I hope this video has been helpful. I truly appreciate any comments or any suggestions on how I can be of better help to my fellow investors. Until then, bye-bye. Don't forget to share, subscribe, and like the video. Thank you.